Over to you.
Beautiful. Well, thank you everyone. Thank you everyone for joining us once again on another Port Jackson Securities webinar. We're very lucky to have Vulcan Energy, obviously the zero carbon lithium, to present to us today, and we have Dr. Wedin to join us as well. He's the CEO and Managing Director. We will lead into a bit of a presentation, and obviously, as everyone knows, this is for research purposes only and not to be construed as any financial advice. Ladies and gentlemen, you will have the opportunity to ask a few questions at the end of the presentation, and we'll read those out with the time that we have left. Dr. Francis, obviously, thank you very much for having us present your company today. We look very much to hearing about this. I think a few new investors are looking forward to hearing about what you've got to say today. So if you wouldn't mind just leading us on, we'll get into it.
Thanks so much, Lachlan. Well, thanks to everyone for your time. Good morning. So yeah, my name is Francis Wedin. I'm the founder and CEO of Vulcan Energy. Excuse my slightly croaky voice, by the way, got a bit of a cold. But so Vulcan is a very unique company. So we are an integrated renewable energy, so that's heat and power and lithium chemicals company, specifically lithium hydroxide company. Our main mission is decarbonizing lithium production and providing lithium production from Europe for Europe. So from our deep brine resource in southwest Germany, from which we're currently producing renewable geothermal energy, we're also intending to produce lithium hydroxide, which we've been doing at a pilot scale for the last couple of years, and now we're entering into our essentially commercial execution phase for phase one of our development. In doing so, really the core mission of Vulcan is, as Lachlan said at the beginning, zero carbon lithium, so producing lithium with a net zero carbon footprint and zero fossil fuels used in the production. And this is quite globally unique. What we're doing in terms of the technology is not so unique. We're using commercially available technology and bolting them together, but we're engineering out the fossil fuels from the flow sheet and engineering in renewable energy to replace those fossil fuels as a source of energy. How it works, so we have this deep brine resource, which is a resource of two things. It's a geothermal resource, and it's also a lithium resource. And it's actually the largest lithium resource in Europe and globally significant, very, very large lithium resource that we've defined there so far. What we'll be doing, what we're already doing, is we're pumping this brine up to the surface. You can see our geothermal renewable energy plant there at Insheim. So we have existing wells and plants. We're going to expand this as part of our phase one commercial development for lithium, essentially drill more wells in and around this production area. But we have these existing wells. The brine comes up hot to the surface, around about 165 degrees centigrade. We produce heat and power from this brine. At the moment, we're just producing power. Increasingly, heat is becoming an important topic because of the Russian gas situation in Europe, and it's much easier to decarbonize power than it is to decarbonize heat. Heating is really the elephant in the room in terms of decarbonization. So heat will be much more of a product for us going forward. So you're producing renewable energy from this brine, taking about 100 Kelvin off in the process. You're left with brine which is about more or less 65 degrees centigrade. Now, normally what happens is we re-inject this brine back into the reservoir, sort of from the same location on site, ends up being 1.5 to 2 k's away, deep in the subsurface, back into this sandstone reservoir. In this case, we don't do that directly, so co-located on site, we'll be building a what we call absorption plant or lithium extraction plant. And here we run the brine through a series of sorbent-loaded columns using our own sorbents, which is based on a technology which has been known about since the 70s, when Dow invented lithium extraction sorbents, and has been used commercially since 1996, and is now used commercially at a number of lithium plants in the world. So this is commercial technology. We're bolting this together with the geothermal heat. The difference that we have with the incumbent users of this technology is that this technology is not reagent driven, it's driven by heat. and the incumbents use fossil fuels to heat up the brine. We don't do so. We use the geothermal heat embodied within the brine to drive the process. So that's what I mean in terms of engineering out the fossil fuels from the flow sheet. We then produce a lithium chloride concentrate, a very pure one from this, which gets transported via truck to what we call our central lithium plant, or CLP. This we will be building at a chemical park called Höchst, just outside of Frankfurt. It's using commercially available chlor-alkali cells. Instead of using sodium chloride, we're using lithium chloride. And we use this because we have power available in spades in this chemical park, and we're able to produce a very pure lithium chloride product, which is suitable for those cells. The advantage of this process is that we can use renewable power, so we don't need to use reagents to produce lithium hydroxide like is done in most of the brine markets today. And increasingly, we're seeing the industry move towards electrolysis to produce lithium hydroxide instead of the traditional legacy route. So what you're ending up with here is you've got a product that you're selling here, renewable energy from this point, and you've got a product that you're selling here, lithium hydroxide. And throughout this process, zero fossil fuels are used, and we actually produce more energy than we consume. So we have a net zero carbon footprint as a result of this. The history of Vulcan is it dates back to 2018 when I founded the company with a geothermal expert in Germany called Dr. Kreuter. I myself come from a lithium background, hard rock lithium actually, and started my lithium career in the Pilgrim of Western Australia, which the project we worked on is now in production as part of Pilgrim project. So I come from a hard rock background myself. I stepped away from that in 2018 to start Vulcan, really as Lithium 2.0, trying to find ways of decarbonising lithium production and using existing production methods to achieve this. We went public in 2019, so we've been public since then. 2021 was a transformational year for us. We raised a lot of capital. Cumulatively, we raised about 400 million Australian since we started, and that has included cornerstone investments from Hancock Prospecting in Australia and Stellantis, top 5 global automaker, which covers Peugeot, Citroën, Opel, Vauxhall, Fiat Chrysler, etc. So Stellantis are now our second largest shareholder at 8%. We also have signed fully binding lithium hydroxide offtake agreements with, I would say, the main names in the European auto and battery industry. Stellantis, obviously, Volkswagen, Renault, Umicore, and LG. So we're fully sold out for the first 5 years of production, which is important for our financing. We've also become a renewable energy producer through the acquisition of those geothermal wells and plants. We have acquired a number of geothermal engineering companies in-house, so we have that expertise in-house for the brine development. We've also acquired a drilling company as well, so we have these rigs in-house because there's a big rush in Germany towards developing geothermal projects on their own, not just not with the lithium as well, but just the geothermal side. So there's a big competition for resources and for equipment, and we kind of foresaw that, and we took the equipment and the people in-house as well. So a lot's happened over the last couple of years. Now this work has culminated in the completion of our definitive feasibility study in February this year, which has precipitated the start of I guess what we would call the execution phase of the project, or phase 1 of the project. So we're starting to deploy our capital towards this execution. We will have, or we do have, a number of financing work streams happening in parallel. But really now this is moving into the execution phase, so the interesting phase really of getting this project built. Phase 1 refers to 24,000 tonne per annum of lithium hydroxide production, over 300 gigawatt hours of renewable power, and over 200 gigawatt hours of renewable heat production per annum. So it's a bigger project than we currently have there in terms of renewable energy, and with that you get your economies of scale on the lithium side as well. And we're targeting first start of production in late 2025. Phase 1 will be located in the core of our field. So this is the Upper Rhine Graben. In the orange, we have our primary producing reservoir, which is called the Bunter sandstone. So think of this a little bit like an integrated oil and gas project, just minus the oil and gas. Instead, you're transporting around hot brine containing the energy, and you're transporting around the lithium. But it's got a lot of similarities with the oil and gas industry, and that's why actually we're mostly recruiting from oil and gas companies to help us build this project. So this is a very small oil and gas project in terms of capex and complexity. So I'm simplifying, but it's becomes quite a straightforward job for some of our engineers coming in from the likes of Shell, BP, Woodside, Santos, etc. Phase 1 focuses on the core of our license field. Now we're the largest license holder in the Upper Rhine Valley. We have about 15 licenses covering about 1,500 square kilometers. Within 10 of those 15 licenses, we've identified 26.6 million tons lithium carbonate equivalent of JORC resource. So this is what I mean. This is the largest lithium resource in Europe. It is globally significant. And the significance of that is we can grow in a stepwise manner, phase 1, phase 2, phase 3, as the market grows as well in Europe. Phase 1 focuses on the core of the field where you have those existing production wells and plants, and then the idea is we'll have further phases as we step out north and south. So we'll be producing from this core of the fields, transporting lithium chlorides up towards Herx, where we have our CLP, which will be producing the lithium hydroxide. You can also see that we're in the middle of the European battery industry. So we've got Kaiserslautern nearby, which is the site of Stellantis's gigafactory developments. Across the border in France, we've got further gigafactory developments in Italy nearby, in Germany, Poland, cathode plants, battery gigafactories. There's a complete reinvention of the European industrial system, which is this electrification production of batteries, mostly for electric vehicles in Europe. So we're right at the core of that, and we couldn't be closer to our customers if we tried. We'll be using our existing production and reinjection wells, and we'll be adding new production and reinjection wells. So you can see, once again, similarities to oil and gas. We're tapping into this deep brine reservoir, pumping it up to the surface, and then re-injecting it and pushing the brine across to achieve that sweep across the field. So drilling capability, very important as we build the production infrastructure across the field. We've modelled the dilution that we would see over the life of phase 1. We modelled it quite conservatively, I would say, because we have constrained the model at the border of our licenses. The reality is we'll see inflow from surrounding areas. The brine doesn't stop at the border of our licenses. But even with that, we see a very stable production profile of about minus 1.6% decline over the life of the project. So after 30 years of production, we're still well in the order of where we want to be in terms of above cut-off grades. So it's a long life project, phase 1, and then obviously this is not counting further phases elsewhere around the field. I mentioned we have in-house drilling capabilities, so you can see a snapshot of these rigs here. These are essentially electric oil and gas rigs, onshore oil and gas rigs. And I mentioned we bought the teams in-house as well. So second half of this year, these rigs will be starting to drill production and reinjection wells in the core of our fields as we execute on that construction of the project. We'll be piping around hot brine, once again similar to an oil and gas system. So we'll have distributed well sites and collection points. So once again, think of an upstream, midstream, downstream in the energy industry. Significantly, in the area where we are, there is existing oil and gas infrastructure and pipeline infrastructure, so we can piggyback in some cases off the back of that. So none of what we're doing is particularly new in the area, and considerably less troublesome, I would say, because we're pumping around hot water and not hydrocarbons. So there's a good precedent there. In terms of the footprint of what we're doing, you can see here the geothermal plant is extremely small. It's like the size of a small supermarket. We're surrounded by vineyards in a picturesque area. There's fields, farmland area. Some of the areas which we'll be developing are industrial zones. We have Ludwigshafen next door to us. It's the largest chemical complex in Europe. So there's a lot of industry around here. But you can see we fit in very well with the local area. We have a very small footprint, and this is why we think this works in Europe. It is very difficult to get mines up and running in Europe. I know that from experience. And this is effectively the modern way of extracting lithium with very small footprints and zero carbon footprints. We'll be building a larger version of this geothermal plant with the lithium extraction as well. So once again, you can see the size of that footprint is going to be extremely small, and it's going to be within an existing industrial complex. Net energy position, this is what makes Vulcan really unique. So our net energy position is net positive. We will be producing more renewable energy than we consume, and that's a really important part of our zero carbon lithium claim, which is obviously very core to the mission of the company. In terms of lithium extraction, we've been piloting this for the last 2 years. This is an established, existing, commercially available technology. There are commercially available sorbents off the shelf. We've tested all of those. All of those work on our brine. They work well, but most of them come from Russia or China. So we were conscious at the beginning of this story that we wanted to onshore this supply chain in Europe, in the West. And we saw the lithium extraction technology as being a major part of the value proposition for Vulcan. So unlike other lithium companies, we're not giving away any of our projects to a technology provider. We're not giving away large fees to a technology provider. We've developed our own sorbents in-house, and we invested early on to get the expertise and developed a large team, a sorbent development team, to develop this as well. So existing technology with a few tweaks to optimize it, and we developed our own sorbent, which we call VUL off the back of that. We piloted VUL. VUL works very well, like the other commercially available sorbents, but just a bit better because it's been a bit optimized. And we have an agreement with a French company to manufacture this for us, a toll manufacturer to manufacture this for us, just across the border in France. The next stage of our process is to, we call it a demonstration plant. It's basically an optimization plant. We'll be starting that up middle of the year. This is also connected to the live geothermal brine. This isn't to prove the process, this is really to train the team and optimize it as we build out the commercial side as well. So the running of this and the commercial builds will operate in parallel. And this is a serious piece of kit. This is basically a commercial demo, contains all of the different equipment that the commercial plant does as well. So very important training tool for our operations team. In terms of the process, we've made a lot of improvements along the way. We have pressurized our system, which reduces our OPEX further, and this has been reflected in the definitive feasibility study, which we've just published. So a lot of good developments has happened over the last couple of years. This is what the lithium extraction plants will look like as we develop across the field. This is what our, sorry to skip too far there. This is what our central lithium plants will look like and where it will be located. You can see this is a Herx chemical park. Important to note that we're building essentially a chlor-alkali plant within the park full of chlor-alkali producers. So once again, permitting wise, very standard what we're trying to do here. Significantly as well, we have secured a large plot. These are quite hard to get in chemical parks in Europe. The space is tight, and we have space for 2 further phases after phase 1, which is important for our development as a company. So phase 1 hopefully is just going to be the start. In terms of the capex, so the headline figure is about 1.5 billion euro. That was from our definitive feasibility study. We're now in our bridging engineering phase, so we're looking for some value improvements and hoping to actually get this figure down reasonably significantly as part of that. But in any case, if we assume it's 1.5, this is split between the geothermal side, which is around about half that, and the lithium extraction and processing side. If you look at lithium projects today, such as the Covalent JV, we're at about 2.5 billion Aussie capex for that integrated project. 1.5 billion euro is in the ballpark, I would say. The difference is we're also getting the renewable energy generation as well. So I would argue we're getting more for our money here as well. Once we're in production, we should have an extremely low OPEX. So I'd say capex it's in the ballpark. OPEX should be extremely low indeed compared to the industry standard, and that's because we produce our own energy, which lowers our operating cost. So you can see here, relative to projected costs for the industry in 2025, we should have one of the lowest, if not the lowest, out there, because we're using that energy embodied within the brine to drive this process. And that creates a very low reagent and energy footprint. So very sustainable business for the longer term with that low OPEX. We mentioned offtake, so once again, fully binding lithium hydroxide offtake agreements with really the cream of the European electric vehicle and battery industry. This is really important for our financing. Banks want to see this for the first, well, for the payback periods, which for us is 3.5 years. This covers the first 5 years of production at least. So this gives us a very solid lithium pricing assumption. If the lithium price went to zero, which is not going to, we would still be producing at profit. So we have some fixed pricing in there, some floating, some floor ceiling, and this gives us certainty on payback and gives the banks certainty, gives our customers more certainty as well. So we have an average price of about €30,000 a ton for our lithium hydroxide in our models. Now this will flex up and down a bit as the contract prices flex up and down, but the sensitivity is taken out of it because of the pricing mechanisms within our offtake contracts. This gives us a very healthy target revenue of just over €700 million per annum. We report in euros because we're dual listed on the Frankfurt as well as the ASX. You can see that you do get some revenue from the geothermal side, so that provides solid payback for those geothermal wells and plants, but predominantly most of the revenue comes from the lithium side. Excuse me. This gives us some pretty healthy economics for the definitive feasibility study for our phase 1. So a very high EBITDA margin of 84%. That's because of that low OPEX. That gives us the 3.5 year payback and a post-tax MPV of €2.6 billion, and that's just for phase 1. IRR also healthy at 26%. So we've split these out into geothermal and lithium just for ease of understanding what this will look like as a separate business. As you can see, the lithium figures become even higher than if you split them out from the geothermal side, which is more like an energy infrastructure asset. Combined, they make for a very healthy project indeed. And on the geothermal side, we're benefiting from a fixed feed-in tariff for renewable power that we sell into the grid, which basically runs for the life of the project over 20 years. Permitting is an iterative process. It's ongoing for us until we start production. Everything's going to plan so far. We're running on a pretty tight time schedule, so there's always a risk of delays, but so far we've seen a number of preliminary EIAs granted, which means we don't have to do full EIAs in those areas, and that speeds up the process considerably, and that's because we've focused on making this a very low impact, essentially non-mining extraction project. So so far so good on the permitting front. ESG is really very core to who we are. We were founded on a core goal, zero carbon lithium, which is very much the E in the ESG. And that's being reflected now in our ESG risk ratings as well. So we have some of the highest ratings in the industry, and first among peers in the chemicals industry as well. And we're continuing to push to try and be a leader in this space. We've adopted voluntarily the climate reporting, TCFD reporting. We're also a member of TNFD, which focuses on biodiversity as well. So hopefully Vulcan will continue to be a leader in this space. And we are certified carbon neutral now, and we'll aim to continue to be so in the future. Our position there, you can see relative to the rest of the industry, there's a high delta in terms of what we're decarbonising. So this is the core of who we are. So there will be a material decarbonising effect on the lithium industry when we get into production and when we start expanding that production. Water-wise as well, an average lithium brine project takes hundreds of tons of lithium, hundreds of tons of water to produce 1 ton of lithium hydroxide. We have basically got that down to 1 ton. So through water recycling streams in our process, this is really as low as you can get in the industry. This is an industry-leading figure. So very proud of the environmental metrics behind our project build. Looking ahead to 2023, obviously we're already well into April. we'll have these demo plants up and running to train our team. So we've got an operations team now, which we're building under an BASF head of operations that we've appointed. So we're going into that execution operations mode, and those guys will be training on those plants for the next 2 years, basically while we build the commercial development. We'll be drilling our first production reinjection wells to complement the existing production reinjection that we've got. So basically this is part of our CapEx, so we're starting to execute on the CapEx. And we'll also be doing the funding work streams as well. And this gets quite interesting. So we have a number of different routes open to us on the financing side. We have circa 120 million euro in cash. So we're deploying that towards the CapEx already. But by Q1 of next year, we want to close equity and debt financing for basically the remainder of that 1.5 billion euro CapEx. So you can see here on our timeline. We are working with BNP Paribas on the debt side. And we have had some really good feedback initially from those banks. So we're looking at commercial funding, we're looking at ECA guarantees as well, and we've got really good feedback so far. There's a lot of banks that want to be associated with this project because of its environmental credentials, as well as just because the economics look really positive. So we'll have the debt financing running, which we're targeting for completion Q1 next year. In parallel with that, we're looking at equity financing as much as possible at a project level. So we're in discussions with strategic corporates to invest both in the lithium extraction and geothermal side and also the lithium processing side as well. And those discussions are starting to sharpen up, I would say. So I think what we're looking at is a potential sell down of up to 50% at a project level for phase 1. And really warehouse that at phase 1, and that reduces dilution for investors at Topco. And obviously, as part of that, we're looking for a higher valuation at that sort of project level. We're speaking to some really high quality names in the energy industry and in the chemicals industry, and I think bringing in a technical partner with that expertise as well as a financial partner will be a real boost for our project. So some very interesting discussions happening there. I should say as well that we are continuing as if we're going to go it alone. So we built out a team of about 300 personnel across the organization now, mostly located locally in Germany. We've got development, we've got project execution, and we've got production teams being built out under our executive leaders, supported by our support functions. This is very reflective of that oil and gas DNA that's coming into the company, because these are the guys who've been really the leaders in this type of project execution for the last 20 years. So Vulcan is undergoing a transition now from being a development company into being much more an execution and production organization going forward. So 2023, really transformational year for us. Hopefully some strategic investors coming in, helping us to bolster this, and really starting to make this happen on the ground, turning plans into reality. I'll leave that there then, and welcome any questions you might have.
We might open it up to the floor, ladies and gentlemen. As we said at the start, if you have any questions, you can start submitting those. We do have just a couple have come through, and I certainly answered them just at the end, but more or less, you touched on debt and equity as the ways of raising money. Is there possible grants at the moment that you've been trying to go for, and what's been the success of that at the moment?
Yeah, so in Germany, you have the Heating Network Funding Scheme, or the BEW, and we are in the process of applying for those grants that can get you up to 40% of your capex on the geothermal side, on the wells and piping and plant. So that could be quite significant, where we are going for that. We also understand there will be, as part of the Critical Raw Materials Act and Net Zero Industry Act, which was recently announced, there will be larger pots of funding for the lithium side, for the critical raw material side. And we are in close conversation, I would say, with the member states, so Germany in this case, to apply for that funding. In terms of timing, we're hoping, or we're targeting, you know, something by the end of the year, but obviously it's out of our hands. I mean, this is, you're working with governments ultimately, so they tend to work at their own pace. So we will we'll continue with that, and obviously any grant funding is welcome, and we think we have a very strong case to be supported, but we can't let it slow us down, so we'll continue on our own work streams in parallel with that.
Absolutely, absolutely. We just have a question about the timeline. Obviously, we keep talking about the construction and then more or less getting towards that stage. When do you see that happening?
Well, we are effectively starting construction second half of this year, in that we'll be drilling our production and reinjection wells, so that comes off our total capex. But in terms of plants, you know, we're aiming to break ground so Q1 next year for the key plant that we need to build. So effectively, we start middle of the year, and then in terms of construction on the plant, it will be early next year.
Excellent. We do have just one final question. It sounds like this is a very unique project overall, and Francis, the big question goes, Francis, it looks very unique, but at the moment, is this really feasible, and can it be replicated elsewhere as well?
Yes, I certainly think it's feasible. As I said, I mean, we're not reinventing the wheel here. We're using commercially available technologies. Can it be done elsewhere as well? Yes, it can. I mean, there's developments of a similar nature, I would say, not exactly the same, but of a similar nature in California, because there's a lithium-rich geothermal brine there. There are other areas in the world where this is being looked at, but I would say we're pretty lucky in the Upper Rhine Valley. We've got a very large resource. We've got high flow rates, we've got heat, we've got lithium grades, we've got the salinity needed to drive the lithium extraction, which is key. So these geological conditions are quite unique. I'm sure we'll find, I mean, we didn't know many hard rock lithium projects in 2014 when I started in hard rock lithium, and now they're everywhere. So I think when you start looking for them, you start to find them. So hopefully we can build this, we can build phase one, and then hopefully we can apply this elsewhere in the world and continue to build out at scale.
Absolutely, absolutely. Well, thank you very much for your time, Francis. Do you have any final comments?
No, thanks everyone for your time, and thanks for having us on.
No, beautiful. Well, thank you very much. That's been another production by Jackson Securities. We look forward to seeing you next webinar. Thank you very much once again.